framework. So as they use professional, as they use what we call professional skills, it should be within the law, which is legal, and what's called the professional framework altogether. To do what? To determine what's called nature and extent of the work. So that is the scope. So auditor will basically use professional skills and judgment within the confines of law and what's called professional framework. And this is essentially there to do what? To determine what's called the nature, timing, and extent of work done. So on the other side, when you talk about what we call the private audit, the scope of work is basically determined through agreement between a client and the auditor. There's no layer. So you say the scope of work, agreement, scope, determined, call it determined, between auditor, between agreement, by what's called agreement, and we call it between what we call the auditor, and the client, So I'm just saying that these private audits are not determined by the law. So the scope of this professional framework and judgment is within the law and what we call professional framework. But for this, agreement is determined between auditor and the client. What is supposed to be done is determined between the auditor and the client. Is that understood? We'll respond with a yes if that is understood. If that is understood, we'll respond with a yes. So then we proceed to what we call levels of assurance. Levels of assurance. Levels of assurance. Assurance. So when we are talking about assurance, the essence of audit, opinion is assurance altogether. We say that audit is meant to provide assurance. Are we together? So the essence of audit is basically to provide what we call assurance. And that's why you're saying that audit is what's called independent examinations of the books of account records by an independent auditor in order to express an opinion whether the financial statement basically portray what we call a true and a fair view and whether they have been prepared in accordance with the reporting framework. So audit is basically supposed to provide what we call assurance. Then I want to ask Salma, does audit provide what we call a complete assurance? Do you think audit can basically provide what we call a complete assurance? Can audit basically provide what we call a complete assurance? Can audit provide what we call a complete assurance? It can never provide a complete assurance altogether. But you say the best assurance, especially for this, especially for audits, they provide what we call a reasonable, so what we call high level of assurance, where what we call the engagement risk is exceptionally lower. Are we together? But when it comes to these private audits altogether, these are an assurance. So the private audits are basically to provide what we call limited, so what we call low level of assurance. To do what? Are we together? To reduce what we call risk to expected level, but that risk is higher than in reasonable, so what we call high level of assurance. Are we together? So when you talk about public audit, they provide high level or what we call reasonable assurance. They provide high levels to what we call reasonable assurance. So these ones provide what we call limited. We call it limited assurance. So this provides what we call limited assurance. It does provide what we call limited assurance. Then audit risk. So audit risk comes from this altogether. We talk about audit risk. So then we talk about what's called the audit risk. So when you talk about a reasonable assurance, in terms of risk, we say that it is exceptionally, in this, it's exceptionally, the word it's exceptionally lower. It is exceptionally lower. It is exceptionally lower. So under reasonable assurance, the risk level is exceptionally lower. So, but for this, we call it comparatively. We call it comparatively. comparatively, and the word is lower. It is comparatively lower. So for this, basically, we call it comparatively lower. So the risk level under the private audit is basically higher than the risk level that is in what we call a public, so what we call a statutory audit. Together. Are we together? So in terms of liability, we can talk about auditor's liability. In terms of auditor's liability, in terms of what we call auditors, we call it liability. So we understand that for auditor's liability, under the public audit, we need to understand that may extend to third party. So this may extend, liability may extend, we call it may, we call it extend. The word is may extend to what we call to third party. May basically extend to what we call third party. So for this private audit, because these are simply between the client, and the auditor. So the liability does not extend to third party, does not say extend. The word is extend to what we call third party, does not extend to what we call the third party, does not extend to the third party. Respond with a yes if we are together. If we are together, we give it a yes. We give it a yes if we are together. We give it a yes if we're together. Then I want to talk about two aspects in terms of reporting. So in terms of reporting, when you have the public audits, who are you reporting to? Salma, when you have the public audits, who do you report to? You're reporting to the shareholders. For the private audit, you are essentially reporting to who? To the shareholder. When it comes to reporting, can add it to reporting. We have what's called reporting. When it comes to reporting, you're reporting to the people that you call to the shareholders. You're basically reporting to the people that you call shareholders. On the other hand, when it comes to a private audit that are done basically at the evolution of the client, who are you reporting to? In terms of reporting, who are you reporting to? To the client. Are we together? You're reporting to the client, the person. You're basically reporting to the client. You give reports to the client. Are we together? You give the report to the person that you call the client, to the person that you basically call the client. Members who wanted the audit report or the client. I hope that is understood. I hope that is understood. I hope that is perfectly understood. Are we together? So in terms of even procedures altogether, when it comes to external audit, the procedures that are being carried are detailed or what we call extensive. If you look at public audits and private audits, in terms of procedures, the procedures that are basically carried out under the public audit are detailed, so what we call extensive. However, for the private audits, so what we call voluntary audits, these audits, the procedures that you carry are limited procedures. You don't carry out what we call extensive procedures. I hope that is at home. So then we proceed to the next, that is what we call internal. We have what's called the internal. We call it the internal audit. We have what's called the internal audit. We have what's called the internal audit. So what is an internal audit from the word? We started with the private or external audit altogether. And from private audit, we had public and private audit. So we moved to internal audit. So internal, the one is within. Are we together? When you talk about internal, the word is essentially within altogether. So we call it continuous independent appraisal. Are we together? Continuous. What do you call continuous? We call it the continuous. And then we call it independent appraisal. Continuous independent appraisal. We call it the continuous independent appraisal. of company's operations, of company's operation, of company's operation, of company's operation, of what we call the company's operations, systems and procedures, systems and procedures, systems, and what we call and the procedures, systems and procedures. And who is doing this? Paul. Paul is not in class. Who is doing this, Awiko? Continuous independent appraisal of companies' operations, systems, and procedures. Who will carry out internal audit? By an internal auditor. So the word is by the person that we call internal, by the internal auditor. So this is essentially carried out by the internal auditor, essentially carried out by the internal auditor to determine effectiveness, to determine, the word is to determine what we call the effectiveness. The effectiveness, to basically determine what we call the effectiveness and efficiency, effectiveness and efficiency, and what we call efficiency, and what? Effectiveness, you can just say effectiveness of and efficiencies of ICS. And we do what? And they're supposed to report to, provide feedback to management, provide what we call feedback, and provide what we call feedback to who? To management, and provide what we call the feedback to management together. So that essentially means that for the internal auditor, who do they report to? Who do they report to? Who do they report to? Internal auditor. Who do they basically report to? Who do they report to? They report to the management. So then you proceed to the distinction between internal. We talk about distinction, and we call it between what we call internal, and what we call the external audit, and the external audit. So distinction between the internal and what we basically call external audit. So the distinction between internal and external audit. So we can create a column. On one end, we have what's called internal audit, and then we have what we call external audit. So we have what's called the internal audit, then we have the external audit. So we have internal audit, and then we have what's called the external audit. So distinction, that is the difference between internal and what's called the external audit. So on the first modality is purpose. The first aspect that we differentiate is what we call the purpose. So what do you think is the purpose of internal audit, team? What is the purpose of internal audit? So what is the purpose of internal audit? What is the purpose of internal audit? It's within. So the purpose is to do what? Add value to the company's operation. You know, when assessing the ICS, add value, the word is add value to what? To the company's operations. Are we together? So that is the work of, in terms of purpose, internal, so that, you know, when the auditors come, even the external auditors come, they find when the things are already on check. So the essence of an internal audit is basically to add value to what we call the company's operation, to basically add value to what we call to the company's operation, to basically add value to what we call company's operation. Then when you talk about external audit, to basically express opinion, whether financial statement, express opinion, express opinion, whether. F is financial statement, we say portray true and what call and fair view. Whether financial statement portray what call it true and fair view. And whether the financial statements are basically been prepared according to what called the reporting framework. But today, for example, ask you, do you think an auditor can provide you an absolute assurance? Do you think an auditor can provide an absolute assurance? It is not possible. That's why in the definition, we say that whether financial statement portray what you call a true and fair view, but you don't say absolute. So that's the first purpose. That is the first purpose. Is that understood? The first difference on purpose? Give Mwalimu a yes. Give Mwalimu a yes. Status of an auditor. The next is status of an auditor. So internal auditor, look up, internal auditor. Who is internal auditor? Is it an employee or not an employee of the company? Internal auditor, status of an auditor. Is he an employee of the company or not an employee? So if you look at the status of internal auditor, this is an employee. Employee is employee of what we call of the company. Internal auditor is basically employee of the company. Internal auditor is employee of the company. Then external auditor, an independent contractor. So this other one, we know that independent, we call it independent contractor. We call him the independent contractor. We call him the independent contractor. So external auditor is an independent contractor. So then we look at the focus of an audit, internal audit, focus of what we call of audit. So when you look at the internal audit, where is the focus when it comes to internal audit? Where does it focus on? So where does internal audit basically focus on? What is the focus of an internal audit? What is the focus of what we call an internal audit? What is the focus of an internal audit? So what is the focus of internal audit? The focus is on company's operations. So the focus is activities and procedures altogether. So the subject matter of audit is what's called activities and procedures. So this one basically focus on activities and what's called and procedure. So it does focus on activities and what's called procedures. So the focus of what we call the internal audit is essentially activities and what's called procedure. Then we can talk, we know that we understand that the subject matter is basically audit of financial statement altogether. This is audit of what we call the financial statement. Audit of what we call the financial statement. The focus is activities and procedure. This is audit of the financial statement. The scope of work. So we talk about the scope of work. Who defines the scope of work for an internal auditor? Who is the employer? Who is the employer? Who defines the scope of work? Who defines the scope of work? Management. So the scope of work for an internal auditor is basically determined and say determined by management. Call it determined by the management. What about external audit? Who determines the scope of work for an external audit? Who determines what's called the scope of work? The scope of work. Who determines the scope of work? Of the auditor, external auditor. External auditor. Who determines the scope of work? Of course, is appointed by the shareholders. The scope of work is determined by legal and professional framework. That should be legal. That should basically be legal and what's called the professional framework. Professional framework. Legal and the professional framework determines the scope of work. Then appointment. In terms of appointment. Who appoints, for example, the internal auditor? Who appoints the internal auditor? Give me a yes. Who appoints the internal auditor? So this is management. Management is the one that determines the appointment. What about external auditor? External auditor appointment is done by the shareholders. So these are the shareholders. So appointment is basically done by the shareholders altogether. So in terms of report, we'll talk about report. When it comes to reporting when it comes to reporting. So we understand that report to who? To the management. They report to the management. They report to the management. So this was external auditor reports to the shareholders. So they basically report to who? To the shareholders. If that is understood, you give mwalimu yes. If that is at all on the difference, we respond with a yes. Respond with a yes if we are together. If you are together with mwalimu, then you give him a yes. Perfect. In terms of liability, as the last one, in terms of liability, in terms of what we call liability. So the auditor, in terms of liability, on the aspect of internal auditor, we need to understand that internal audit is liable to the company under what? Under the terms of employment. Remember, internal auditor is liable to the company under the terms of what we call employment, under what we call the terms of what we call employment, under the terms of employment, under what we call the terms of what we call employment, liable to the company under the terms of employment. But when you look at the external auditor, an external auditor is liable to the company under what we call the engagement, and liability may extend to the third party, and the liability may extend to the third parties, and the liability may basically extend to the third party. Are we together? So the external auditor is liable, is legally responsible to the company under the terms of what we call engagement. So when you talk about engagement is either to 10, are we together? Is liable to the terms of engagement. What is an engagement letter? Whenever we talk about engagement letter, engagement letter comes from the auditor to the client altogether. So an external auditor is legally responsible to the company under what we call the terms of engagement, and liability may extend to what we call may extend to the third party, and liability we say may extend to the third party. Give me a yes if we are there. Give me a yes if we are there. Give me a yes if you're there. So engagement, when you talk about engagement, that would be ISA, International Standards of Audit to 10. That would be International Audit to 10. International Audit to 10. That will basically be International Audit to 10. I want to ask a very simple question before even we get it. What's the difference between accounting and auditing? Just by the way, what's the difference between accounting and auditing? What is the difference between accounting and what's called the auditing. What is the difference between accounting? What is the difference? If I ask you today, because we'll do it last, what is the difference between accounting and auditing? So accounting involves preparations of financial statements. Auditing involves examination of financial statement. Together, Salma. So one of the differences between accounting and auditing, when you talk about accounting, it involves what we call preparation of what we call financial statement, and auditing is basically examinations of the financial statement. Are we together? Together. We respond with a yes. That was, by the way, preparations of financial statement. That is accounting. Then there's examinations of financial statement. It therefore implies, look up, it therefore basically implies that you cannot carry audit without accounting altogether. If financial statements have not been prepared, what audit are you going to do? So it means there has to be preparation of financial statement is when you examine those financial statements, whether they basically portray what's called a true and a fair view. The second aspect, though, we are going to write them ahead. When you look at accounting, they're guided by International Accounting Standard, that is IS. Are we together? When you talk about accounting, we normally understand that guided by IS. Are we together? International Accounting Standard. What about auditing? Auditing is guided by ISA. Auditing is guided by what you call ISA, International Standards of Audit. Given examples of ISA, I've mentioned one. There's what you call engagement. Engagement is about ISA, that should be ISA to 10. We have audit planning. When you talk about audit planning, that's ISA 300. Audit evidence, that's ISA 500 altogether. So accounting is guided by International Accounting Standards, while auditing is basically guided by the ISAs. And I've mentioned a few ISAs. When you talk about engagement, that is about ISA to 10. When you talk about planning, audit planning, that's ISA 300. When you talk about audit evidence, that will basically be ISA 500. That will basically be ISA, we call it ISA 500. Are we together? So when it comes to the person who carries out accounting, who carries out accounting? Who carries out an accounting? Who carries out an accounting? Accounting is basically carried out by a competent accountant altogether. Are we together? Accounting is basically carried out by a competent accountant. Respond to the yes, Mungai and Benson if you're there. A competent accountant. So when you look at auditing, we understand that auditing is carried out by a qualified auditor. Is carried out by a qualified auditor. There's a statement that Mwalimu made. Look at this statement. Is accountant an auditor? Accountant an auditor. Do you think an accountant is an auditor? If I was to make a statement and say, accountant, is an accountant an auditor? Is an accountant an auditor? Mambo imekuwa moto. Accountant or auditor? Are we going to rethink again? Are we going to rethink? Accountant is not an auditor, but an auditor is an accountant. So accountant is not an auditor, but an auditor is an accountant. Together, accountant is an auditor. An auditor is an accountant, sorry. An auditor is an accountant, but an accountant is not an auditor. Together. So say that an accountant is not an auditor, but an auditor is an accountant. Is that statement understood? So in terms of also difference, we understand that when we talk about accounting, accounting is basically what we call continuous altogether. Accounting is essentially what we call continuous altogether. So the accounting accounting is basically a continuous process. But when it comes to audit, audit is basically periodical, or account, unless you're having continuous audit. But you're saying that accounting on its own, accounting is a continuous process. While on the other hand, when I look at auditing, auditing is essentially what we call periodical, together. Are we together? That was a by the way. That was a by the way. We were talking, that was a by the way. By the way. Are we together? Are we together? So, but we also say that, audit, the role of audit is simply to provide assurance altogether. And we have two types of assurance, either reasonable or a limited assurance. But you cannot have what we call complete assurance. One of the reasons Mwalimu says that you cannot have a complete assurance, why? Why can't we have what we call a complete assurance? Why can't we have what we call a complete assurance? Why can't we have what we call a complete assurance? Why can't you have what's called a complete assurance? Because most of the time it's sampling altogether. Most of the time it's sample. If for example, you sample 10% and 90% is sample, can you provide a complete assurance? You cannot altogether. We also have inherent limitations. That's why we cannot. Auditing is about providing what you call express opinion whether the financial statements basically portray what you call a true and a fair view. I want to talk about briefly ESAs before we talk about classification based on timing. I just want to talk about ESAs, briefly ESAs. Sorry. These are what we call international standards of what we call of audit. This is the first topic. So there's something that I always mention. Remember this unit has about 16 topics. 16 what? Topics. This unit has 16 topics. But no worry, everybody will pass in this class. No worry, everybody will pass. I'm just simply bringing to your attention, audit has about 16 topics, Benson. So it means we have to be on par. The days that I will ask you to, extend, the days that I will call for an extra class, please don't be annoyed. I've said it earlier. The days that I will ask for an extra class, but this time I don't want to ask for them late. I will be asking for them after a month. I will start that good habit. So then we talk about these ESAs. We say that auditing are basically are done in line with ESAs, what we call international standards of auditing. What is ESAs? What is ESAs? ESAs, we call them authoritative statement put in place. We call them authoritative. Authoritative. We call them statement. And you say put in place. Authoritative statement put in place. Authoritative statement basically put in place by accounting profession. By accounting profession. We call them by an accounting profession. By an accounting profession. Authoritative statement put in place by an accounting profession. And why does it put it? To be applied during audit exercise. To be applied. To be applied. To be applied. And say during what's called the audit services. During audit services. So if you ask something on that, Benson, Eden, Awiko, you now understand what ESAs are. We say authoritative statements that are put in place by accounting profession to be applied during audit exercise. That is what ESAs are. Together. Give me a yes. We call them authoritative statements that are put in place by accounting profession to basically to be applied during audit services. That's what we call ISAs. You can be asked a question, this is very common, advantages of ISAs. You can be asked briefly. We talk about advantages. We call it advantages of what we call ISAs. So what are the advantages of these ISAs? International standards of audit. So they provide uniformity and consistency. Like, for example, if I think ISA 300, which is auditing planning, it provides uniformity on how we should carry it. So one, it provides uniformity. It provides what's called uniformity and what's called consistency. It provides what's called uniformity and what's called consistency. It does provide what we call uniformity and consistency. Then we have interpretation of auditing concept. When I want to interpret, I go back to the ISA. So that's interpretation of auditing concept. Interpretation of what we call of auditing. We call it concept. The assist in the interpretation. If I want to interpret auditing concept, I go back to ISAs. Then we understand that standardized, we know that audit moves in this way. The standardized audit procedures, standardized what we call the audit procedures. They basically standardize what we call the audit procedures, reduce what we call expectation gap. Do they reduce expectation gap? The misconception, reduce what we call the expectation gap. It does reduce what's called the expectation. It does reduce what's called the expectation. It does reduce what's called the expectation gap. It does basically reduce what's called the expectation gap. And we can also, when there's dispute as an auditor, when you're talking about how does an auditor reduce liability, or do they solve their dispute? They use the ISAs. If you want to minimize dispute with the client, follow what you call ISAs. So they essentially solve what you call solve disputes. So we can say they solve what you call the disputes. They solve the dispute. Then we can talk about briefly the disadvantages. Their disadvantages. We can talk about 3 of the disadvantages of ISAs. The disadvantages of ISAs. These things are rigid. When you have the standards, they become very rigid, not flexible. They are very rigid. You're not flexible. You don't move from it. Rigidity. One of the things is rigidity. Rigidity. They're not inflexible, or we call it inflexible. Rigidity is what we call inflexible. They're very rigid, and therefore we call them inflexible. Rigidity is what we call inflexible. We can also talk about additional workload when auditing small company. Additional workload, additional, we call it workload. And you say when auditing small company, when auditing what we call the small companies. You can imagine you're auditing small companies, and I have to refer to ISA to 10, the engagement. I have to refer to ISA 300 on audit planning. I have to refer to ISA 500 on audit evidence. So mechanical. Sometimes you become more mechanical. You're not creative. You become mechanical. It renders somebody mechanical. You're not, you become mechanical. You are not creative at all. You become more like a robot. Then you can talk about not understood by the public. So these issues are not understood by the public, not understood by what you call by the public. Hence to say that hence widening what you call the expectation gap. If they're not understood by the public, they keep on widening the misconception of the public about what auditors basically do. So then we were on types. and say classification. We stopped at classification. Classification. We stopped at the classification. We stopped at what's called the classification. Classification of audit based on timing. Classification of audit. Classification of what we call of audit, and we call it based on what we call on timing. Based on timing. Classification of audit based on what we call based on the timing. Classification of the audit based on the timing. Have you understood on the ISAs? Is it understood? What you said on the ISAs. If that is understood, you respond with a yes. Well, respond with a yes. Did you understand what you said on this? Is that understood? So then you proceed to classification of audit, and you're saying based on timing. Classification of audit based on timing. You know, we have audits that are done in the middle of the year. We have audits that we keep on doing. Are we together? And then we have audits that we carry out at what we call at the end of the financial year. Are we together? So audit may choose to start audit work in the early of the year or wait to the end. As an auditor, you may decide to choose to carry out audit at the beginning of the year. You may choose to wait for to carry out audit at the end of the year, which together. So basically, when it comes to timing of audit, the number of factors that are there are we together. So timing of an audit, whether to carry it at the beginning, in the middle, or the end, there are a number of factors that are basically put in place. Tunapatana. Are we together? Tunapatana. Are we together? Am I providing assurance? Are you believing more on audit? We say audit is supposed to provide assurance. Am I assuring everybody that you are safe in my wings? I hope I'm assuring you that you're safe in my wings. Benson and Peter, Eden, are you safe with me? I hope you're safe with me. Audit is supposed to provide assurance. Salma, are you safe with Malimu? If you are, you say yes. Yes, we must be safe because I'm supposed to provide assurance. I hope I'm providing assurance. So we're saying that audit can basically be carried earlier in the year. We can decide to carry out audit in the middle of the year, but you can also decide to carry out audit at the end of the year. But based on timing, when you talk about timing of audit, is influenced by a number of factors. Timing, we need to understand that timing of what we call of an audit is basically influenced. The word is influenced by what's called by a number. The word is a number of what we call factors. So the timing of audit, essentially, we understand that is influenced by what's called a number of factors. And I always say this in class. Please, all of us, are we called our representative? This is a pass. In every class that I am in, I always tell students that we must pass, all of us. Are we together? It's not a command, but it's always something that I tell students that the goal is to see everybody pass. Everybody pass. In every class that you see me in, one of the things that I tell students, make sure that we pass. Make sure that all of us pass. Representative, carry that burden with you. That is what I'm saying. So when it comes to audits that are basically carried out in the middle of the year, what is the name given to those audits? Audits that are basically carried out within the year. How do we call them? How do we call them? We call them interim audits altogether. What about audits that we carry out at the end of the year? How would we call them? We are getting back to this. How will we call them at the end of the year? At the end of the year, we call them final. What about the audits that we carry on constantly? We carry them at the beginning, in the middle. We keep on carrying them. How would you call them in terms of timing? We will call them continuous audit. So I basically stopped at the point where I was saying, in terms of timing of audit, it is basically the timing for audit is basically influenced by a number of factors. Number one, the deadline fixed by client. A deadline, number one is deadline, deadline fixed by what you call by a client. Number one is what's called a deadline that is essentially fixed by a client. Would you, if the work is so much, would you carry out only final audit? If there's a strict deadline on timing, you may decide to carry out interim and final, or carry out in continuous altogether. But again, also the size of the client, business, and volume of transaction. If you're to say you're going to carry out final audit and the size and the volume of transaction is high, you may not fail. You may fail. Size of the client, business, we call it size of what we call of the client, business, and what's called volume. And the word is volume of what we call transaction. Size of what we call the client business and what's called the volume of what we call transactions. Then you have what we call the extent to which clients provide schedules and analysis. Extent to which client, extent to which client, the word is client, can provide, extent to which clients can provide, we call it provide, schedules and analysis. Schedules and analysis. Schedules and analysis. So say the extent to which a client can provide what's called schedules and analysis. The extent to which a client can basically provide schedules and analysis altogether. The extent to which a client has a strong system. Extent to which, we can talk about extent to which we call it a client. A client has what we call a strong ICS, a strong internal control. Then talk about the nature of audit. The nature of audit. Nature of what we call audit. And we just have one more. Nature of audit as a factor that determine the timing of an audit. Then we have what's called financial year end of other clients. So if you have many clients, financial year end of a client, financial end year of what we call of a client. Financial end year of a client. That will basically determine the timing. Are we together? If a financial year of a client end in August, can you carry out audit? After, let's say, for example, you carry out audit after 6 months of that year? Can you carry out after 6 months of if a financial year ends in August, and you come after 7 months after the financial year end? Do you think it would be appropriate? Would that audit be appropriate? If the financial year of a client ends in August, and then you want to come even after the 4th month to carry out audit, would it make sense? Would this company be on time? Would they be on time? They will not be on time. 6 months shall have elapsed. In fact, 4th month would have elapsed altogether. At least you say after 2 months of the end of the year. So the timing, the financial year will guide you when to carry out the audit, especially the final audit. The financial year will guide you. But again, the quality, in terms of timing, the quality of accounting system, you can look at what we call the quality. We call it the quality of what we call of the accounting system. Systems. The quality of accounting system. They always say that every car must take a break. So we can take a break. It's a norm. I don't know whether you don't want a break or you want a break, but it's always a norm that you take a break. So as a norm, let's follow it and take a break. So we can have our break. Is that okay? A break of 10 minutes then we come back. Is that okay? If that is okay, we give it a yes. If that is okay, we give it a yes. We respond with a yes. As a norm, every car must take a rest. So we take a rest as a norm. I'd like us to get back to where we were. So we talked about factors that influence the timing of an audit. So the three alternative timing of an audit. So there are basically three alternative timings of audit. So we have, based on this, we have alternative timings of an audit. We have what called continuous audit. We have what called continuous audit. We have what's called interim audit. We have interim audit. And then we have what's called the final statistical completed audit. So I want us to start with what's called continuous. So what is a continuous audit? When you say continuous audit, what do you mean by continuous audit? What do you basically mean by continuous audit? So when you say continuous audit, what do you basically mean? So you said on timing of an audit, just a recap. So the timing of an audit, either to carry out continuous, either to carry out interim audit, or whether to carry out what's called final or completed audit is determined by a number of factors. So number one is what's called the deadline fixed by the client. We talked about the quality of accounting system. We talked about the financial ND of a client and the nature of audit. These are factors that need to be considered. So based on timing, we have three types of audit. That is what's called the continuous audit. We have the interim, and then finally we have what's called final, so what we call the completed audit. So I want to start with continuous. So when you say continuous audit, what do you basically mean by what's called the continuous audit? So it involves what we call examination of transaction as they take place. So continuous is examination. The word is examination. Examination. The word is examination of what we call of transactions. The word is transaction. And the word is as they take place. As they basically take place. So we have examination of what we call of the transactions as they take place. That is continuous as they take place. So as you carry out audit, visits in client premise are basically regular. Auditors visit in client's premise is regular. Visits are, when you talk about visits, these are basically at regular intervals. Visits are basically, when it comes to auditor's visits, we understand they are at regular interval throughout the financial year. So say throughout, the word is throughout what we call the financial, throughout the financial year. So they're basically regular throughout the financial year. So the visits are basically regular throughout the financial year. And what does it do? It performs what we call examinations of the client's records altogether. It looks at the financial statement records and vouchers altogether. But you're basically saying that the visits are regular. Examinations of what we call transaction as they take place. That basically means that the visits of an auditor, independent auditor, is basically what's called regular. And it comes to do what? Throughout the financial year. To examine what's called the records, we can talk about financial statements or what's called vouchers. Are we together? Is that understood? We'll respond with a yes. If that is understood, that is what's called a continuous audit. Are we together? Respond with a yes if you're together. Perfect, Aiden. So again, we will not just carry out, because audits are very expensive. We will not just decide to carry out what's called a continuous audit altogether. So there are conditions that basically make it ideal to carry out, to be there at the client premise regularly. There's what you call conditions that will basically precipitate that you basically be at the client premise regularly. So you not carry out a continuous audit because it is very expensive. However, we are basically saying that there are conditions that basically would result into an auditor being present in the client premise regularly. So we call it conditions that are ideal for continuous audit. We call it conditions ideal for what we call continuous audit. Conditions ideal for what we call continuous audit. So we call it conditions. Conditions, we call it ideal for what we call for continuous audit. So conditions that basically are ideal for what we call continuous audit. Conditions that we say are ideal for continuous audit. Why would we carry out continuous audit? What are these conditions that would basically result into a client agreeing to what we call a continuous audit? So number one, you're dealing with large volumes of transaction. Number one, I will say sorry. You're dealing with what we call large volumes of transaction. Are we together? So one of the conditions that will make it ideal to carry out continuous audit is when you're dealing, we call it large volumes of transaction. Number one is what we call large volumes of what we call transactions. So this requires that you carry out continuous audit, large volumes of transaction. When an organization deals with large volumes of transaction, how to get that. But again, the second reason why we would have what we call a continuous audit, auditing organization with strict reporting deadline. Auditing organization, say auditing, what we call organizations with what we call with strict reporting. We call it reporting deadline. So when you're auditing organizations with strict reporting deadline, that would basically make you to carry out what's called a continuous audit. But at the same time, in terms of a system, we have two types of a system. We have two types of a system. We have a weak system, a weak ICS, and a strong ICS. So in terms of the strength of the system, when you're talking about a weak system and a strong system, which one would you carry out continuous audit? Which one would you carry out continuous audit? As an auditor, if you go to a weak system, if I go to a system that is strong, my work becomes easier. Are we together? If a system has a strong systems, then basically as an auditor, my work is very simple. However, if the client system is weak, that will precipitate me basically to carry out what we call a continuous audit, where the client system is weak. So we have the next is where the client system is weak. So where the client system is basically weak, that will basically precipitate you to carry out what we call a continuous audit, where the client system. But again, where the auditor is under special audit assignment, where the auditor under what we call special audit assignment. Auditor is under what's called a special audit assignment altogether. So again, also, as an auditor, when you have what you call as clients with similar NDA, if you have clients with similar NDA, how are you going to do them? So when an auditor has client, has what you call client with what you call with similar, the word is similar NDA. So definitely carry out continuous audit so that you're not caught off guard. You can imagine if you have 40 clients with similar NDA and you wait until the end of the year, you'll be in problem. You will be in problem. So when you have clients with similar NDA. So I want us to talk about briefly work carried out during continuous audit. Work carried out during continuous audit. So what we call work carried out, we call it work carried out during what we call continuous audit. So what happens during continuous audit? What is the work that basically happens during continuous audit? Work carried out, and you're saying during continuous audit. What is this work that is basically being carried out during continuous audit? What is this work that is carried out during continuous audit? So one of the first things that are happening is basically to obtain understanding of the client business. Because before you carry out audit, obtain understanding of the client business. That's one of the sign-in. Obtain what you call understanding of what you call of the client business. This is one of the things that happen. Obtaining what you call understanding of what you basically call the client business. Then you say, ascertain recordings of the system. After understanding, you ascertain recording of the system. Ascertain what you call recording of what you call of the system. Ascertain what you call the recording of the system. Ascertain what you call the recording of the system. Again, you also do what you call compliance test. That is evaluating what you call the same. There's also evaluating what you call the system. And that is what's called the compliance test. We call it the compliance test. Evaluating the system, and we basically call it the compliance test. Evaluating what we call the system, and we call it the compliance test. And we call it the compliance test. Evaluating what we call the system, and we call it the compliance test. Then say we can also have what we call limited analytical review. Why is that limited? Because you do not have bulk altogether. So we have limited analytical. We can call it limited ARPs, analytical review procedures altogether. Continuous, they will be limited, not extensive. Then when it comes to detailed testing, we also have what's called limited substantive testing. Limited, we call it limited, and the word is substantive testing. We call it the limited substantive testing. You will carry out what's called limited substantive testing. You will carry out limited, we call it the limited substantive testing. Then I want us to proceed. Is that understood? Is there anything that is not understood? Give me a yes if there's anything that is not understood. Is that understood? These are what happens during continuous audit. Why are we saying limited? Because there's just a small amount of work that you're doing. Thank you, Benson. Vanessa, do you understand what you're doing, Vanessa? I hope you're in class, Vanessa. Are you getting Mwalimu? If you're getting Mwalimu, you respond with a yes. Perfect. We say that this paper should be passed. All of us should basically pass this paper because this is enjoyable but at the same time is very applicable, very, very applicable to this profession. So then we'll proceed to what we call advantages of continuous audit. If you decide to be very fourth point, okay, analytical review procedures. We call it analytical review. I'm expounding review procedures. Procedures. That is what we call ARPs. Have you understood the meaning? So examples of analytical review procedures. This is reasonableness test. You can also compare financial and non-financial information. But a clear examples of ARP, we have ratio analysis. These are examples of analytical review procedures. Ratio analysis, reasonable test, those are analytical review procedures. Is that understood for those who ask for the fourth? Nani aliuliza the fourth? Who asked for the fourth? If you've understood, give mwalimu yes. Perfect, David. So then we proceed to what's called advantage. So what is advantages of basically being in the premise of the client at regular interval? We call it advantages of what we call continuous audit. Advantages, we can talk about two advantages of what we call continuous audit. What will be the benefit of this continuous audit? Maybe we give one or two. We'll give one or two before we basically close it. So one of the advantages of a continuous audit, it basically, if you're there regularly, faster completion of an audit. You will complete it very fast. So we call it faster completion. We call it faster completion of an audit. It does facilitate what's called faster completion of an audit. So one of the positives of a continuous audit, an auditor basically being regularly present in the client premise, is that it facilitates what's called faster completion of an audit. But at the same time, errors and fraud can be detected at an earlier stage. If you're carrying out continuous audit, we understand that errors and what we call fraud can be detected, and say at an earlier time. You don't have to wait at the end of the year. You can detect them at an earlier time or stage. Reduces what we call audit risk. The risk level, if you're carrying out, reduces. We understand that this reduces what we call the audit risk. It does reduce what's called the audit risk. The positive of it is that basically it will reduce what's called the audit rate. It will reduce the audit risk. But at the same time, we said it facilitates preparation of management letter. Facilitate what's called facilitate preparation of management letter. So management letter comes from the auditor to the client, facilitate preparation of the management letter at an early stage. I basically say that we have engagement letter, we have management letter. So for the management letter, it comes from an auditor to the client. It basically talks about the system of a client. It points out the weaknesses in the system of the client and provides for recommendation. An auditor basically looks at the internal control system of a client, and then it reports deficiencies in the system. But at the same time, an auditor will provide solutions or recommendation to the deficiencies that are basically being detected in the system. But you're saying that for a continuous audit, it facilitates preparation of that letter, what we call management letter, coming from the auditor to the management. Doing what? Pointing the weaknesses in the client internal control system, and at the same time, providing recommendation for those weaknesses or deficiencies that have been detected in the client system. Understood. If it is understood, we respond with a yes. If that is understood, we respond with a yes. If that is understood, we respond with a yes. So because of time, Again, we can talk about the continuous being a preventive measure against fraud. If you're carrying out continuous audit, it basically acts as a preventive measure against fraud and error. But at the same time, if as an auditor, I'm carrying out what we call a continuous audit, what happens is that basically it boosts what we call effectiveness of the control. Because if I was to come at regular interval, I will be able to point out what is happening. So as I point it out, they're able to boost what we call the internal control system of an organization. Are we together? It causes the client staff to be more vigilant, and up to date with accounting records. So if there's an auditor who is basically coming continuously, though it's very expensive, but what it does to your staff is that it causes the staff to basically be vigilant with the accounting record. They will not mess with accounting records, but the staffs, they will be basically vigilant with the accounting records. Because of time, I may wish to move, but there's another class that is supposed to take place. So I beg to stop at that point, unless somebody has something that is burning. That person can have an opportunity to ask a question. And as we close, I want to say that God bless you and God bless our class. But at the same time, you're our ambassador. Speak about focus, tell others about focus, expand our boundary as we also expand your boundaries. So God bless you. Unless somebody has a question to ask, the time is yours to ask the question. But I beg to stop it at that point. Is there anybody with a question? Then we wrap it. God bless you all. We see one another in our next class. Thank you so much, Benson. Thank you. Bye, Edin. Thank you so much, Awiko. Thank you, Vanessa. Yes, Awiko. Mwalimu is here. The notes were shared. I think they were shared. We can forward. Somebody can forward. I shared the notes. Yes, the notes were shared. Awiko, check the group. Yes. Somebody to forward so that